Colleagues, is Tusanang. Thinkers Machilo Smart. Yesterday I promised I would make a short video on the trading thesis for shorting Snap. This is it. So starting from a fundamental perspective, Snap shot up big time. It was mainly due to the earnings report. That's what made it shoot up there. On the chart, it's really a major move. It was around 28 or so and shot to 43. A good move for them, good earnings. I think it's more to do with the people in these lockdowns hangover. They really gave some tech companies good moves. But my thesis is around the issue that this was just a once-off and it has overdone it, and I expect it to come back to these averages here. Why do I say that? The company's business model is really messed up and it's coming up against major competition. As a company, yes, great valuation. It's now great market cap. It's now at almost 64. PE, forward PE doesn't have the current ones all over the place. It's about 419. The average for the S&P is about 20 something. This one is on 419. It's well overpriced. Unfortunately, I don't have a peg. And yeah, they're not making any money. They're making losses. They made a loss of about 1.1 billion. And yeah, there's no margin, no profit margin. It's all negative. Earnings quarter on quarter. Yes, they had great sales, which got them to shoot up there. But for those sales, they were making losses anyway. They were not making any money. So if you are selling a product at a loss, I don't see great news in that. But yeah, momentum kicks them up. So basically, this company, what it's doing, it's selling lots of products. Product sales are increasing, but they are not making money out of those sales. They are making losses. Put another way, if I manufacture a product which people like, but I cannot sell it at a price which will give me a profit, and I keep selling more and more of that product while my production cost and my cost of doing business is higher than the price I'm selling at, I'll be making a loss. That's not a sustainable business. This type of business, you will be expecting that as time goes on, they will turn a profit. But Snap is in a serious fix. Why I say so? Let me just open some of the analysts' views. This is Street Quant, one of the analysts which I like to view their reports. They also got it on a serious sell. Yes, the price has been going up for the past 3 years. Revenues have been increasing, but here's the key. Return on equity, all negative because of those losses they are making. Can't get a PE because of the negativity there. But the forward PE is about 400 and something. The S&P was about 34. Subsector which they operate is about 35. They're at 419. Just pick the gap there, the difference. It's major. And yeah, they're not standing out in comparative to the other companies in the space. They're just on the unfavorable side. Even Facebook, one of the key competitors whom they will have on this business, is on the green side. They are on the negative. So I don't see how they can turn it around and try to start making a profit. Even on revenue and growth, they're not that great. Facebook is next to them, Google is there. Man, this is not a company which I would say, okay, they're trying to grow revenue, but they can convert that to earnings anytime soon. CFRA also have them on a negative. If you see this red line, that's where they think the target price is. So they have the target price close enough to 20, they between 25 and 20, but more closer to 20. So if I would take this to be an average about 22, they're seeing a potential, they're seeing target price almost half of where this company is trading at currently. It closed at 43, and they're seeing value at about a target price at about 21. So it's about half of where it would be expected to lose about half of its market cap to get to that level. That's how CFRA think they are. And if you go through this briefly, if you're watching this video, you can pause this and read through their summary of their also assessment. There are powerful competitors like Facebook, Instagram, WhatsApp, Google, and YouTube, and newcomers TikTok, which I think all of these are stronger than Snap. So that's why I'm thinking Snap is really not on the ball. That's my take. I'm thinking, yes, they had a good jump, but I'm seeing them coming back to this 21 zone here, this bottom here. That will be the resistance on the way down, the support. So that's where I'm also seeing them coming down to. That's the fundamental analysis view. The technical one, here's the chart for the weekly chart. If you can see, they're all grouped there. This stochastic RSI, they're all grouped there. Once they group up there, usually the current trend will stop. Like you see here, once they grouped there, the upwards trend stopped and this thing went down sideways. When they were grouped there, the move upwards stopped once they grouped and we had a major fall, the corona fall. When they were grouped there, the move upwards stopped and we had a sideways move. We're at that zone now. Currently, they are grouped at the top there on a weekly basis, and I expect the move to stop, either do a sideways or a major down move. But I'm more on the major down move to this support zone here, 2144. Let's look at the daily chart. Daily chart, we also have a grouping again. So this is a multiple time frame grouping. On the daily and the weekly, both are agreeing that this is a top zone. And I expect a move downwards or sideways, but more on the downwards. So my thesis from a technical perspective, I'm in a sell zone. Fundamentally, the business model is messed up. They have major competitors which are far much better than them, and their business model is really not on. And they have not been making money, and their business would crash if they try to price their product any better, because the competitors are giving it away for free. So they cannot start saying they will try to price it higher. They would lose all those people to their more stronger competitors. So my view, my thesis is we're going to go down on Snap. And in brief, what I'm saying is, yes, they have moved up, but here we are currently. Where we are currently, my thesis is they cannot stay where they are. The market can only do three things. It can go sideways, go up, or go down. And technically, I have groupings showing me that we are likely to do two of the three possible scenarios in the market. Either we'll do a sideways or we'll go down. That's the technical view which I'm getting there. And this company has a weak business model, so it reinforces the idea that we are likely, if the market as a whole crashes, we're likely to crash big. Where am I getting that idea? Last time the market crashed during the corona crash, this company, just looking at where it dropped to, it dropped more than about 58% drop. So where we are currently, if the market was to drop and it was to drop, and looking at my target, it's about, I'll have it on a target of about 53% drop. So my thesis is the market cannot stay where it is. There are more likely scenarios it will go down big, about 53%. That's where I'm coming from. And most people are afraid to go with their thesis, because what if I'm wrong? That's the scenario which catches most people. The what if I'm wrong? That's where the option setup comes in. That's why I said I would share two things: my thesis for shorting snap and also my structure for the option trade. My structure for the option trade, because I have two scenarios, I've eliminated one. The market is unlikely to continue going up because of the grouping of these stock RSIs. So we're left with two scenarios. Either it does a sideways move or it goes down big. So in those two scenarios, I'm more on the it goes down big. But now here's where the option structuring comes in. The option structuring should answer this question. If it does a sideways move or worst case scenario continues going up, I should avoid losing money. That's why I'll put a structure at this level where the market is currently, so that if the market continues going up, I still don't lose money. If it goes down big as I expect, I'll make a killing. And in brief, that type of structure, you can use what we call a put back ratio spread. I'll just do a quick, I did not put it up here. Put back. It's a standard usual options setup. Here it is. Here the pictures. I'll just pick on this simple one, this one here rather. It will illustrate my point easier. So what you do is you structure it in such a way that quick now. Oh boy, it's gonna take forever. Okay, this is how you structure it, so that if this is the at the market position when you structure it, if it goes against you big time, continues going up, you get to be paid a little bit, because you have put the option structure for a credit. So you still get paid if you are wrong. If it goes your way, you get a great move. This is the put back spread option, which I would recommend for beginners to use. That would be for beginners to use. If you are more advanced, I would rather say go and use, I spoke at length in this video about 5 backers. It's the same thinking as the back spread, put back spread, but instead of using, okay, let me simplify it. The back spread, what you are actually doing is you are selling in the money puts, buying them at, selling in the money puts and having a vertical where you sell these puts here, you buy one day. So this is a vertical credit spread. And then you buy out of the money or at the money put, which will be the kicker for you. So you use this structure, this side, to finance the put which you buy. So you are buying it at the money. The difference with the structure which I'm showing you, instead of this put being in the money, this credit spread, you do it out of the money and buy the put at the money. So that's a small difference. But if you want to fully understand, this is the entry version, the put ratio back spread. This version which I showed here is the more advanced one. What basically it does is, as soon as you move that way, you balance off, and it's much steeper because the put which you bought is at the money, not out of the money. So you start moving big time quickly. That's the structuring. What it basically answers is that if I'm wrong, I'll still get paid. If I'm right, I will have this thing performing like almost like somebody who bought a put. So there is serious leverage. And what happens with this, once it moves about 20%, I'll be around the 5 bagger. I'll make about 5 times the money which I put at risk. That's how I would structure it. So that would answer, if I'm putting it here, if we go up to 50% down, or even just this one move here, it's more than 20%, I will make about 5 times capital. So that's, and if I'm wrong and it continues moving up, big, I'll get that credit. So my chances of missing on this one would be if it stays the same. And that's the whole thesis. My thesis is not going to stay here. If it continues going up, I'll get paid a little bit for the credit. If it crashes downwards, I'll be paid big time. If it stays here, because have structured this using options, I will be able to adjust it because my options, I'll put them for a 3 months period. I'll be able to adjust it and come out with some money still. But the key point is I'm expecting this to crash big in the region of about 50%. That's my thesis, and that's how I would put this together. So I would recommend anybody who's interested in this to check out my video, which I did here on the 5 beggars. You can just visit my videos there. It's not a long video, it's about 11 to 12 minutes, and it would illustrate. It's illustrating the call part, but the put is just the reverse of that, which won't be difficult for somebody to grasp. And yeah, that's my take on Snap. Snap has moved very high due to the earnings report, which people were happy that the sales are increasing. But if you dig a little bit bigger into the business, it's a crappy business, and I expect it to crash back to these 20 zones, 20 to 25 zone. And if I'm right with using leverage of options, I'll make a good killing. That's my thesis for shorting, and that's where I'm coming from. And remember, it's also based on technicals. There is grouping there. Once we usually have these groupings, it stops going in the direction it was going. Either it does sideways or crashes. And this is a multiple time analysis. The weekly chart and the daily chart are agreeing that this is a top zone. Guys, let me try and keep it short. That's where I will end this video. Thanks for listening, and thanks for sharing your time with me. It's Tusanang Pingas Mashilo Sebata. I thank you greatly.